Good morning, everyone, and welcome. Before we start, we have a disclosure. Please be aware of it. We're not your financial trade advisor. Whatever you do, it is at your own risk. At the moment, please be careful. The market, there is no short, no long. And before today is a Friday, you have to be careful not to carry on the weekend with a bad day on the trading. The market on the ES and Nasdaq right now, it was a flat, it dropped to the support area and is hanging in this area here. There is no trade. The only time we're going to see trade, especially our traders, you say, what is all those bunch of lines? When the price is between the lines, the fib, uh, do not touch the market, do not activate the auto trade. My calculation, the market is going to drop. My calculation, the market is going to drop. But the problem is, if we take a short in here, you have a tremendous support, and that is going to be projecting those prices. And this is not a healthy trade. So, despite your auto trade, whatever it's coming from, despite your skill, believe me, you do not have a trend in the market, and you have to be hold all your trade with caution until we find a direction in the market. The same thing apply on the Nasdaq, the same story like the ES, and the ES wants to drop and the Nasdaq wants to go up. If we look at the market analyzer, we just had a buy signal on the ES and Nasdaq. You have one signal buy and two signals short. On the Nasdaq, you have one signal buy and two signals short. The same thing apply on the YM. You have one signal buy and two signal short, indicating the trend is not strong trend. And right now, the market analyzer has initiated a trade to the buy direction, but I do not see the buy in there. Uh, and it is a very weak buy at this moment, and we should not take any trade. As I said before, the market is split in three pieces: above the turbulence, turbulence, or below the turbulence. And right now we are flying right into the turbulence, and you should not take a trade when it is between those lines. When it is between those lines, you are no way you can outbeat the market or predict the market when the market is between those lines. Some people think those lines are rubbish. If you take away, after 37 years trading, if you take those levels away from me, I will not even invest $1 in the market, in any given market. So those are very reliable lines. Fibs, projection, calculation, levels, you name it, is in there. And those are your structure, your both of your feet on the ground to understand where is your limitation in the market. Without them, you are blind. Without them, you are no trader. Without them, you will never have success. Trust me on this. So I respect it when I see, and another things when you see the lines are close to each other, indicating the market is tight. The market no direction. If we compare, as an example, to the CL, you can see the lines are sprayed out because there is a trend. The market is trending. I don't know if I have the gold here. Yes, I do. So if we look at the gold, we can see those lines sprayed out, and exactly you can see immediately on the gold the resistance level is 5028, and if it breaks the resistance level we climb into the 5053. So, and the support area is right here, 4998. It's very clear picture. Where is your resistance? Where is your support? And where is your target? It's very clear where are they, where you are going, and when you need to take a trade. But when you are in middle of the, as you see here, we are in middle of those projection, support, resistance level. Uh, you are in trouble here, and still this market, there is no direction in the market. When there is no direction in the market, you cannot you cannot activate any type of an auto trade, despite where is your auto trade coming from, whether it's from us or somebody else is irrelevant. Your auto trade is not equipped to handle all those whipsaws and all those unknown direction in the market. It's not able to handle those. Those are only uh, can be spotted by a human, by a trained eye. It's not about indicators. It's not about um, what kind of indicator you are using. It's about the market is flat and there is no direction. Has nothing to do with your indicators, has nothing to do with your auto trade. Wherever this auto trade coming from, it doesn't matter. It's going to be the same story. Now, if you are auto trading on a ranker bar, if you are trading reversal, that's one story. But if you are trading with the trend, with a Renko bar, you are one total blind man in the market, and there is no way you can find direction in the market. There is no way. Or range. Range and Renko, they are good for a reversal more than a trend. You use 1 minute on a daily basis because you are a day trader. You use 1 minute, and the 1 minute can give you true direction in the market. If you notice, to compare between the ES, Nasdaq, and gold as an example, you can see the gold is trying to break the resistance. Has been struggling all morning. The resistance is 5028.5, and we can see, look at this, the gold is trying, despite the buyers with the 6 different time frame over the sellers, and all the indicators are in the green, is really struggling to break that area here. And right now we start to break in those area here on the ES, and now the market, it seems like, is changing from short to long on the ES and Nasdaq. It's just changing momentum right now, and it seems like it's going to the long side. So now, if you notice here, when it is a clear picture of what's going on, you can see on the gold you have a clear sky to for the market to go up. You have the institutional target is 5044, and you can stretch that trade to 5052. So the institutional target is right there on the gold, right here, and you can extend it to that area here, which is the sell uh, right there at 5052. This is for the gold. Those are the target after you the the gold, uh, when he breaks this resistance and pull back to confirm it's no longer resistant. now is support. So those are your target on the gold, because you have a clear sky between your targets, and there is nothing holding the gold if you are taking a long trade in there after it breaks the resistance, which he has break the resistance. And this is was the first one. There are two options you can do when it breaks a heavy resistance like this one. You can buy on the breakout, you can buy on the breakout, or you can buy on the pullback re-entry. In another word, this market is going to go back to reconfirm the resistance. Used to be resistant, now it is a support. So there are two options. An aggressive trader, he will enter the market on the breakout, the first breakout. The conservative trader, he will wait till the market close the bar above that resistance. Now it's become a support. The market has to go back and reconfirm is no longer resistant, has become support. If the market confirm it, then there is only one direction, up. It's not your RSI, it's not your MACD, it's not your ATR, it's not your momentum. So right now, as we see here on the gold, it is going to is confirming the used to be a resistant, now is going back to retesting if this one here going to hold or not. And if it's not, it's going to go back and reconfirm from that area here, which this is another re-entry in the on the gold is right here, is 59.18. Now, if we look on the uh, high advance from 1 to 30 minutes, the buyers over the sellers, the indicators are in long. And why in the hell this Nasdaq, this gold is going down? Because when it was here, it is a resistant. This one here is a resistant. He went up above the resistant, going back to reconfirm, and it fell. And the used to be resistant, it fell to be a support, and that can cause the market to go down to the second level to be reconfirmed. So this is something you can use on any given market, whether you are a crypto trader, a future trader, or a forex trader. Always you need the market has to confirm on those trades. Now the second trade, it is as a re-entry, is 5019, is right there. So this is how the market functioned, and now it fell to confirm this one here. There is a lot of support in here, indicating the the gold is going to be projected from 5022 or 5020 or re-enter at 5019. So those the area they are going the gold to be projected from, because all the indication here still showing it is to the long side, it's not to the short side. So this is where the way you need. If you notice here, if we magnify a little bit, there are a projection on 5022 and the market stop on 5022. So this is an idea to practice when if you want to, you can use a micro account and use in one or two uh, contract. And it is very good if you are on a micro account and you want to use as an example two contract, that you can not use the two contract in one place, like what I have done. You can say enter whatever it is you think you need to enter, and enter the second one below. If you get filled on the first one and the market go to your favor, you should not add another trade. And if the market went against your favor, then what you do, you average the price and you can exit much easier with less losses. So also it is two option. You can average your price by two different entries on two different level, or you can enter one contract with a very strict stop loss, and then when it goes down to the second level, you can re-enter the market with a very strict. So there are two options. You can add, have an average price, and exit, or if you want to, you can stay on the strict. If you took a trade and it went below the support, then you exit, and then you put the second trade where I have put it, and then with a small stop loss. So you can have two small stop loss, or if you want to, you can put an average based on two contract. So what we see here right now, the secondary entry is right there. And then if the market is going to come and get filled, we can average the price so we can get out of a big mess. So this is where um, you should never take two trades on it. Now we can see the used to be uh, uh, support is holding, and resistance is holding, and the market couldn't maintain above the resistance line, so the market fell to maintain above the resistance line. So that's why the market went up, retested, and it fell to hold the position above the support. So the support line has fell. So that's how it is, and now it's going back. If we look on the ES or Nasdaq, it's the same story. They came into the two yellow line and fell, both of them, and now the market still, there is no trend in the market, and when there is no trend in the market, you need to stay away from the trades. Actually, you need to stay away from the trades. And that's what happening right now. There are no direction in the market, period. Is the market is just it's gonna make you lose more money than earn money, and especially on a Friday. So right now look what happened now. We got filled on the second one, and you can now put a sell order, and it will be get filled very soon, and your losses is limited. I don't have any trades. I don't have any auto trade is on at this moment. I only have the Russell, and even the Russell is not doing well. And the Russell, this is the only chart I have open, and I don't have any trades on any auto trades, or they are all on hold to find a direction in the market, and there is no direction in the market whatsoever. Just sit on the standby until we have the market going on one direction. Right now, any trade you take, you're gonna lose money, so stay away from the trouble. if you notice now, the gold is going back to retest the resistance at 5028. So it's going to retest it again. So always uh, to again option on the breakout, option on the breakout, or wait till the market break the resistance and come back and confirm. Always wait till the confirmation. It is better. For the Nasdaq ES, I have no trade, and if you notice, is really nasty direction. And if we notice here, the market going on the resistance 68, 62, and come into the support area at 68.30. It's not doing anything. We need a breakout either on the top or on the bottom, and the market doesn't have enough beef for this market to move. So any auto trade you are using right now is going to lose money. That's why all my auto trades are deactivated right now. All the auto trades are deactivated. One gentleman asked me on the telephone, saying, "Isn't the auto trade supposed to know it all?" No, auto trade. Exactly. Who sent me this message? Exactly, Harold. The market is not you decide when you want to get money out of the market. It's not you. It's the market allow you to take money out of the market, not you. No, not you. So in those conditions on the ES and Nasdaq as what it is right now, if you take short, you're going to lose, and if you take long, you're going to lose. So your auto trade is going in a circle, and it will not be making money. Again, if you remember, I told you last week, when you cannot find a manual trade, you cannot find with your eye any entry. This means your auto trade that day is not going to make money. Simple. The market is on neutral, mixed, no direction, no no one is pushing this market up or down, left or right. It's just sitting there. And it is very important on Friday. You should not. Um, but, you can, on a days like this, you have, uh, on a day like this, you have the M strategy. The M strategy on day like this is the best. On a day like this, you can use the M strategy, and it is made for those conditions. Look, on the Nasdaq already finished, because on this auto trade, you can, it's always it is built for those kind of condition. It is built for um, um, I don't know. We have promised one of the traders we need to cover one of the auto trades. I don't know which one. And next Monday, we promised when we were in the webinar to cover one of those auto trades. I forgot, but I'll remember. He will remind me. But after that, this auto trades, I don't have any set in here. But this auto trade, what it does is exactly what I have explained to you on the on the gold. When there is a resistance, you can put the trade and on the pullback re-entry. Now look at this, Harold. Now all the resistance has disappeared from the gold. Look, all the resistance has disappeared from the gold, and now the only resistance we have is right there, and then the second resistance is right there. You see? So right now, let's say if you want to take long trade here, and then a little stop loss. Now you can see you have a clear uh, direction, and your system is pointing not very strong to the long trend, but it is weak trend, and you still have a couple of small dots in there. And if you wanted to trade the gold, uh, you cannot trade the gold on 1 minute. You know, the gold has to be minimum 5 minutes. Now we are using the 1 minute to pinpoint the trend, but if you want to trade the gold, it has to be minimum on 5 minutes to 15 minutes. The gold. So if you are using a micro account, I mean, if we put it on the 5 minutes, you will have a much better vision on the gold. But on the 1 minute is suicide to trade the gold. Even on your auto trade, you cannot trade the gold on 1 minute. Now, if we turn it to the 5 minutes, you can see a better picture on the gold that we have a double resistance on. Now, if we are trading the 5 minutes, here is your target right there. And if we look at the 5 minutes, you can see the line, the wick, where they were rejected from the fib line. So um, this is the first target. This is the second target. This is the break even. So with the gold, if you want to trade the gold, you should be no less than 5 minutes. Now you can use the 1 minute to see the direction, to pinpoint where is your entry on the gold. But the gold, if you want to auto trade the gold, it has to be 5 minutes, 10 minutes, 15 minutes. Even 5 minutes is too small for the gold. But if you are on a manual trader, you can pinpoint where are the trade between the 1 and 3 and the 5, or between the 1 minute to pinpoint where is your entry, and the 5 minutes, and maybe the 30 minutes can give you a very good picture where are the levels, the support, the resistance. And then you can see it just took to the first target, and now the second target is here. We're going to dismiss it, and this one we're going to take it away. Okay, we still do not on the. We're gonna go ahead and reload it and let it take some trades again. We still do not have trades on the ES and Nasdaq. We don't. Very good, very good. Now, if we once look, once we break the last barrel here, the 24,870, we have an entry right there. Right there. We have a buy signal right there. right there. I think we missed it. And now we have, there is a profit taken on this one here. But now the market is broke this area here. And now we are, you can see how the Nasdaq, like the gold, want to go back and confirm. You see, once it's confirmed the support area, it will go back up again. So you don't need to rush to the trade. And if the market fell, if the market fell and broke the support, this means you should not hold that trade anymore. So what it is right now is going back to reconfirm the support areas here. So two options. You can buy on the breakout or on the pullback re-entry. And what it does now, the Nasdaq is reconfirming the used to be support, now it used to be resistant, now it become support. So that's how you can identify your trends. We have an institutional target right there, and the second institutional target is right there, right here. This is the final destination for today. On the ES, I don't want to call the trade on the ES. And here is your institutional target on the, it's right there, 5044, profit taken on that line here. There is a profit taken in here, guys. You gotta be careful on the 6875. And this is the target two, target one institutional, profit taken on this one, and the final destination on the Nasdaq is 24,992, and then it's finished. You can see how the market stopped on that line here because there is a profit taken. So there is nothing wrong with your trend. Your trend is very strong, but there is a profit taken here, and that's why you see the needle is right on that price. And then at 11 o'clock plus minus 10 minutes, we will have the target around 11 o'clock plus minus 10 minutes. So this one here, you see, by being patient a little bit, and you can catch a trend, even if you have some couple losing trades, one time you catch the trend and then you are okay. So now you can see this is the institutional, and I know why this market, it is profit taken on the institutional number. Simple as that. So when you are taking a trade, it is an option for you to either take a profit in here or take it on the second one. It's up to you if you want to be greedy or if you can handle the pullback. Sometimes the pullback can knock you out of the trade. So this is a profit taking institutional number, and you cannot mess with it. Every time the market hit those lines, it's going to be profit taking. That's why I didn't want to call the trade on the ES because it was an institutional number here, and profit taking on an institutional number. And the second one, the final destination for the morning session is right there, 6889. This is the institutional number. That's why I didn't want to call the ES because the it was right on the institutional target, and you don't want to take a trade right front of the institutional target. You're gonna experience the same on the gold. On the gold, your target is 5044. It's right there. This is where you need to take uh, profit right there, 5044. You can see on the Nasdaq how many times the market came into the institutional number and a profit taking. Has nothing to do with your indicator. The market, your indicator, your system is telling you go long, and you don't understand why the price is going down. That's why. It's not all about indicators. And look, watch. This is the target for the gold right there. This is an institutional number. Look, don't follow that trade on the gold. I'm just put it there to show you where is the institutional. Do not take short on the gold, please. The final destination on the gold, if there is a big trend, it will be right there. The final destination 5062.3. This is the final destination. Now, if we look on the NASDAQ, on the target one, all your indicators showing long and the market is going down, and you don't understand why. Profit taking, profit taking. So when you are trading and you see institutional number and the market not able to go higher than your institutional number, this means you need to uh, take a profit. Where is the re-entry on the Nasdaq? Is right here, where your indicator right now from here to here is telling you to go short. You don't have short. You have a long trade, and this is a pullback re-entry, always on the line on the chart. This is where you put your re-entry. Always on the yellow number, you put your re-entry. Always, always. So yes, yes, yes. Uh, that's why when you see the institutional now, if the market is very strong, it's going to climb to the target two, and maybe it's going to pull back to the target one. But if the trend and look where look the gold, look, this is where we set the institutional number, and look what happened. The market plunged. Where is their re-entry? It's right there. It's right there. This is where the re-entry. And look where the institutional number 5044, we missed by one take. We missed by one take. And it's going back. And this is where you get lost, Harold, because your indicator is saying something, your ATR, your MACD, your RSI, whatever you have, but the market go in the opposite direction. This is where you get lost because you're not looking at the chart, you're not looking at the market movement, and you think you are okay, but you're not okay, you know. And you can see how the market dropped, and if you are auto trading, let's say you took an entry and you don't know where in the hell you are in the market, you're just auto trading. This is a very big wick. The drop from 5043.2 within a second, it dropped to the 5030. You're out of the trade if you are long. You are out of the trade, you know? So you have to respect the institutional number. Now, uh, let's go back again. The same story. Let's go back again. Look where we put the entry here, the re-entry on the ES. It didn't hit it. We missed by a few ticks. I'm not going to chase it. Don't ever chase a market. If the market will not come to you, let it go. Let it go. Do not chase. Oh God, I missed it. I better take a trade here. Don't. Why? It's not really inviting right now, the ES, because there is red and the buyers equal to the seller. There is a trouble in heaven. There is a profit taking and trouble in heaven here. So it's not really inviting anymore. And also on the Nasdaq, it's not really inviting. The only thing I'm sitting and watching this Nasdaq because they are a tremendous support area here, hoping that the support area is going to. I'm leaning on the support areas. I'm not leaning on the trend direction. So what it is here, you have a lot of support area, and that what is stopping this Nasdaq to go to the going south and is holding very well because of the support area. So that's what we said. The level here, one trader thinks they are rubbish, and one trader thinks it is a money making machine. One guy see a glass, one guy see diamond. So it depends on the trader how he's looking at the chart. So what I'm doing here, I put the entry here leaning on the support area. Now, if the support area will not be able to hold, then there is no use to stay on that trade. You need to get rid of it. If as long as this market holding on the support area, we are okay. But if it's not, you can sit down and do your training on the micro account. So it is $40, $5, $10. It's not going to damage your account. So if you notice how I put my stop loss, I put it and hide behind the support area because the whole idea here is I'm leaning on the support area. So right now, the same story on the ES, I'll go ahead and put the stop loss below the double support area. Hopefully the support, I'm hiding, I'm protecting my trade and put the stop loss below the support area. So if the market breaks that support area, that means there is no longer we have a long trade. We only have a short trade from now on. And if you notice, the market start changing and the sellers start gaining and the market analyzers start getting red. That's mean indicating the market start losing the ground again, and we are going back to the short direction. So that's why always your investment, your stop loss has to be very tight, and your entry should not be very far from the support resistance level. They should be always hidden behind the support or the resistance level. At the moment, technically, when the market dropped below those lines, that means there is no more long trade. The long trades are finished, and now we are going nowhere with that trades. They are sitting and we are not doing anything anymore. And here it is. We're not doing anything anymore. It's finished. The market, half of it red, the other half is green. The buyers equal to the sellers with a six different time frame. We are no direction in the market. And look, the same story on the gold is coming right now to retest that line. If this line is not able to hold and is going to go below that line, this means the long trade on the gold is finished and there is only short trade, and it will be short below that number, and the target, it will be right here at this level here, your target if you take any short on that one. So right now, the ES and Nasdaq, after climbing to the target one, now it disappeared, the target one. But when it hit the institutional number, profit was taken and the market went and took a dump, and that's it. And now the market going south, and there is no more direction in the market. It's finished. So the same story we can do on the Nasdaq, on the gold. We are using a 5 minutes chart, still very small chart, but this is the re-entry. Those are your target. If the re-entry long didn't work, you need to go short somewhere around there, and your destination is right above the double support. It's already been planned ahead. If the market go in one direction, you already planned where you want to take the trades or not. The market right now, it is really nasty market, and we are right between the support and the resistance. Is not a tradable market anymore. We took the trade, went up to $600-700, and then when it was the institutional number, profit taken and never looked back. Came in right to the tick on the institutional, and that's why I didn't want to call the ES, because the ES also was going on the target one, and when both hit target one, the market went south immediately. Now the same story again and again on any given market. This is your entry right there, re-entry. And if you notice here also, if you want to, you can dismiss that trade. When the market is coming in here, you can see the sellers are gaining to the buyers, and your market analyzer turn into red, and that is indicating the trend to the long side is weak, can go both of direction, because they are not in the green, they are in red. And if this one here going farther down, this mean you need to get rid of that trade and go the opposite direction, reverse. So if it's not holding that entry, this means there is no longer long trade, there is only a short trade. So if we watch what the direction of the, also you can see always the market stops at those lines. Look at this. But we don't have a long trade anymore. Is losing the ground. You have red, the buyers equal to the sellers, is losing the ground. And look where the market stop on the gold, exactly on that number. So that number, above that number is long, below that number is short. There is no communication in there. There is no question about it. If the market maintain above that number, when when the market came in and we put an order here and couldn't maintain, and turn around, that's me. There is no more long trade on the Nasdaq. And the same story here. If the number hold and the market turn around, and maybe it's going to turn to green, right now it is very weak long trade, and it is not. Uh, it will not even get up to the 5044 on that trade. It's a very small trade. It's weak. It's a long, weak trade, and the buyers are equal to the sellers, and the market analyzer, they are mixed. The shorter time frame is in red, the higher time frame is an agreed, indicating this trade here is weak long. So once we know it is a week long, this means take a profit as fast as you can on this. When you see the indicators are into direction, the same direction as your trade, then you can extend the target or you can secure some of the profit. As an example, if we take any let's say let's take the Russell from the market analyzer. This is the Russell from the market analyzer, already 197 ticks, 1000. I have two contracts in here. So and then what you do is then override then what you do, you make it a little bit uh, closer to the market, and because there is a fib in here, and um, the second fib is right there, so you can put your target in there if you want to. And if you look at your indicator on the Russell and you see there is a good trend, you take it to the higher level and then you move your trend stop, or you leave it. The auto trade will uh, automatically readjust your trailing stop, because the trailing stop on this one here is a fib. It's not a stupid trailing stop. Now, if we look again in here, you can see we already predicted the trend is weak. And look, the trend is weak. It's not moving. You can see the trend is weak. We we enter the market perfectly, but this trend, this trade is not going to survive because the market is mixed. There is no indication of a strong trend, and you can see it's sitting. And this is the most aggravation when you are trading live and you enter the market perfectly and the market stay around your entry price, whether it's long or short. That is nerve breaking. That is nerve breaking. One thing you will learn, that when you are on a live trade and the market is dancing around your entry price, and you sit down for 1 minute, 2 minutes, and there is no movement, and the market staying on your entry price, the longer you stay on that trade, you're going to lose. Because if you enter the market, and speaking of a devil, look what happened. The longer you stay on that trade and the trade is not going anywhere, you're going to lose that trade. Because between 1 minute and 1 minute, the market changing direction. The market changing direction. The momentum are different. Right now, the market wants to go up on the Nasdaq from short to long, but I'm not interested in long anymore on the Nasdaq. I'm not interested. It's a fake movement. So when you are in an entry, or when you take a short or long, and the prices stay uh, around your entry price, get rid of it. Uh, Give it a few seconds, and if there is no movement, get rid of it, because it's gonna work against you. Like here, the market, we entered the market, it was 150, 180, and it's not going anywhere. And then we know this market, there is a weak trend to the long when we enter the market. We know it's not going to climb to this line here. We know it is a weak long trend. And then what happened, if you don't cut it fast and get rid of that trade, then the market, it will go against you, and then you will have a losing trade. Now, if we look at the Nasdaq direction, again, you can see there is weakness in the long trend. And then that's why I said, if you take the levels away from me, I will not even invest one dime in the market, because now your indicator telling you to go long, but what is holding me not to go long is those double resistance, and those double resistance in conjunction with the buyers and the sellers are equal, and there are weakness in the market. With the market analyzer from 1 to 30 minutes, there are a lot of red in there. And if you notice what happened, here is your double resistance, you're jumping, your indicator has already telling you to go long, and the market fell. So the reason fell because there is a double resistance, and the market is not cooked enough to go long. It's not cooked enough. There is a still red. It's not well done yet. You cannot eat it. It's still in red. It's not cooked enough to go long. So this is where the biggest mistake happened in those area. Now, if we notice here, the gold came here. Those are, you can try if you want to put a buy order, not because of the trend, because of the support. You can go ahead and put a buy order if you really want to take a trade, and then you always, there are a lot of entries. It depends how risky you want it to be, but you can always uh, uh, find entries on any given chart, whether you want to reverse the market or trade in with the trend or enter the market on the pullback re-entry. There are plenty. Believe me or not, when you catch a trend or when you can catch a trend, let's say you have a three losing trade, small losing trade. When you catch a trend, immediately can turn to $1,000 on one winning trade easily, easily, because you are chasing the market on the key level. You're not taking the trades blindly, long and short, and you don't know where in the hell you're putting the trades. But when you are putting the trades on a technical area, on a very good area, some of them they're gonna go through, some of them they're not. But once you catch a trend, you can milk that cow to the last drop, because you are trading technically. You're not to just put in buy and sell order everywhere on the chart. You are trading keys in the market. So this is an example. The market has no direction. It can go long and short. I have no direction. The buyers equal to the sellers, totally lost. You are in a dark room and there is no flashlight and there is nothing you can see because the market is split in half. You still can find a trade. Either that support area is going to hold or not. And if it hold, you're gonna aim it from here to here, right there. And if it's not holding, you're gonna catch the lower level. So you can reverse the market or you can trade with the trend. Depends where you are in the market. You can always find the trends in the market. You can always find entries in the market. If we look at the gold almost stopped, almost stopped. Now you can see the gold. Um, Look, now you can see the gold came in and turn around from the support area. We look here. This is not an inviting for a long trade. It's only quick trade, like picking up $100, $200 on that. But this is not inviting for a long trade. The sellers now gaining over the buyers. Everything is in red. This is not an inviting for a long trade anymore. On the Nasdaq and ES, this is holding us not to take a trade long because there is a double resistance. 24,854 is a double resistance, and this market, despite your indicator and all the market analyzer, the buyers are equal to sellers. There are no trade. The same story with the ES. Your ES also is on neutral, despite your indicator telling you positive and everything. But this is the um, is sitting on hold, and there is no movement. So those are today. It is one of those days. Um, uh, if you just take in a trade left and right, you have a brutal day to negative. Uh, I mean, you have a really brutal day for a negative. Now we're going back again. The market gaining momentum. You see, it changed. It's a very, the market is like, you know, I mean, men, we're not the moody people, but the females are much more moody, and the market change mood every other second. So you always have to be careful what is the market mood to see if it's um, right now it changed into the long. A minute ago wants to go down, and now it changed into the long, and then another minute don't know where to go. This is the best way when to stay out of a trades like today. This is the best way to stay out of trouble. This is another auto trade. It's from the market analyzer. Again, you can see went up, go down, and you can see this auto trade where he's having a problem is also 1 minute and is having a problem with this double resistant. And here they are. They are the double resistant. He's having a hard time breaking those double resistant. Then the best way is to break even and let it go. Don't touch it anymore. Now look what happened to the gold. The sellers over the buyers. All your indicators pointing short, and the Nasdaq is going up. Can you imagine the aggravation of that trader where his ATR, his MACD, RSI, whatever momentum, pointing to the short side, and the market going the opposite direction? Can you imagine the aggravation? And the problem is he's gonna lose confidence. He keep thinking what I'm doing wrong. That bar going up because he was rejected. When we put a buy entry here, not because based on the trend, based on the support area, and when he was rejected, now it's going back like a pinball, trying to find another place to be slapped from. So when you are taking a trade from here, and look what it comes to this yellow line here again. So there are two trades in this area. If you took the trade from here because you are leaning on the support, your target is there, right there. And if you don't have the trade from here, if you don't have the trade entry from the support area, here is your short entry because this is showing you there is no long, and here is your target. So Whether you are taking short or long, this is what the market is willing to give you, from 5016 to 4999, or from 4999 to the 516. So this is what, this is wrong. Now we broke the double, and now we have an entry right there. I'm gonna skip the ES, because the ES is right above the ES. There is an institutional. I'm not, and the target is right there. And look at this. It's 1106, and the market came into the target one at 1106, and now they are climbing to the target two. Look, and we told you around 11 o'clock plus minus 10 minutes, this is where the targets are. And look, they screw with our head for 2 hours, and at the end of the day, you're going to achieve the target. So now we said a plus minus, we said a plus minus 10 minutes, and you can see the market come to the institutional number, and it dropped. You see, look, and look, when the market are blinking, this means that they are buyers. They are buyers. They are buyers. And here's the target, 6888, and we are have a target one, and we have the target two at 24,991, and the second target is right there, 6910, right there. In case if it's able to break this double resistance, this is target three. Sorry, target two is 6888, and it's right there. And here, the Nasdaq is going to the target one again, and now it is 1108. So sometimes it pay off to stay on the side, not auto trading. And that's why I didn't want to call the ES again. And look where the ES institutional number. And here is the problem is, this is an institutional number, profit taking, and it's going to take the ES down. And the problem with that is going to drag the Nasdaq with him down. You see? Now, if this support area can hold, the ES is going to go back up again. If the support area not able to hold, it's going to drop to here, right there. 6860 has nothing to do with your indicator or your auto trade. Profit taken on the ES at this number, and the market going down. And here is the things is, you can see there are people buying on the ES, and look, they got slapped in the face, and we are going back down to the re-entry point right there. Has nothing to do with your indicator. Nothing. You can see it was blinking like a discotheque here, where people put on orders because they see the breakout. They are scared they're going to miss out. How many people jump in on the wagon from here? This is the oldest trick where they lower the traders. And then on the way up, millions of traders put position where the others sit in here waiting on taking profit. So by the time those traders, those poor traders, naive traders, they think they are smart, they start jumping on the trade. The institutionals are sitting here taking a profit. And now, what is the retailer trader on the NASDAQ or on the ES? What is a retailer or a guy using auto trade? He thinks he have a big gun in his hand. He thinks he's going to kick the market's ass. Whether he's auto trading or manual trading or whatever it is very known well. He is exposed. He's not protected. Um, he is between 10 to 20 ticks stop loss. He's using MACD. Some fib line come out of a used furniture store, and a couple indicator it was on sale in a supermarket in the afternoon. And that's what he is. An auto trade based on those garbage, or an indicator come from a used furniture store or a supermarket on a special offer on Sunday afternoon. That's it. And he want to kick butts in the market, and he's not. He's not educated. He don't have the tools. He don't have the education. He don't have the knowledge, and he want to kick somebody's butt. He has put his life, his eyes, his family online, his education, his computer, his he want to come and kick his ass. And guess what? He's not going to kick his ass. Those we call those retailers are tourists, and eventually they blame whatever platform they're using. They blame the indicator. They blame the weather, but they don't blame themselves. And they again look. It's the same story again. The market came in here. Again, we missed out on the ES. And again, as we said, here it is again, because this one here is a sell order, and here is your target. You cannot do anything about this gold. Here is your sell order, and here is your target. You don't want to go short? I'll live with you. Here is your buy order, and here is your sell order. Limited. There is nothing you can do in this market more than that. Now, sometimes why you go in the wrong direction, sometimes you make a couple $100 today, but you lose 10 trades next week. And look, those are the limitation on those trades. And now you can see the gold stopped. Why? Why the gold stopped? The gold stopped. Why? Now, let's go back here where we put the entry right there. I didn't want to take the look where I put the entry right there. Now let's look at the market condition. Little bit the buyers over the sellers, very mixed market. The condition is not that beautiful to lay next to the NASDAQ. So immediately cover our ass and we put break even. Do not touch it. Only if you want to take a profit. Do not touch it. Do not use a dummy trailing stop. I don't know whose dummy come out with a dummy trailing stop. Don't. If this market broke those double resistance. That means it's climbing to the 24,919. So what we can do, we can move this needle below the double. Used to be resistant, but now they become support. You leave your trailing stop away from the price action. You leave it away, you hide. So now, okay, we are sitting here. I know my target is an institutional target. It's not from Mustafa used furniture store. So here it is. If the market moved up, uh, then I can use the trailing stop and hide it behind the double support. It used to be double resistant, now become double support. So, and then we know we are climbing to this institutional number, and we missed the ES by one tick, you know. And then let's look at the wick. Look at the wick. I don't know if you can see it on YouTube. Now you can see it. Look where the wick is on a double resistant. Is on a double resistant. That's why we are cautious, because weakness in the trend and a double resistance. So what we need, it's not an auto trade. We don't need a genius guy. You have two options. You can take a profit with $500 in here, or if you have self-confidence, you want to take it all the way to the top, then it's fine. Once this one here break the double resistance, you move your needle and you hide it behind the double support and don't touch it. You secure some profit. Let me give you another example. This is the Russell. It's going climbing to his target. Now I can easily hide behind the okay, one of the resistance disappeared. It's no longer valid. That's fine. Little bit, if this Russell break that one here is fine. If it's not, I have secured my profit. Another one is right there on the YM. And look at the YM where the double resistance right there. You can put your trailing stop behind the stop loss, behind the support area. If you decide you want to take the market, you can take him all the way to the where is the market. If it cross those double resistance and it's going to the target, immediately you put your target there and you hide your trailing stop behind the double support area. So now if we go back to the NASDAQ, if we go back to the NASDAQ, you can see the NASDAQ came in one time, two times, three times, fell. What is showing us in here? Weakness. We don't need to sit down and be having a light bulb on our head to fuzzle with every number in there. But what we have, weakness. The support, the buyers with the sellers with a 6 different time frame, they're almost equal. There is trouble in heaven here. There is a red and green like a Christmas tree. They're not all in a green and they are not all in red, indicating a weak trend. And then you have the indicator, some are green, some of red, which indicating this market collapse again. And if we look at the ES never seen anything above the institutional target. All morning, he was not able to climb to the target two. Target one, target two, usually 11 o'clock, between 11 o'clock, plus minus 10 minutes. Today, the ES was not able to go above the institutional number. which in given us in a plain English, all your indicators that were irrelevant to the ES trade. All your indicator, all your AI banana crap you think you have built a robust system, they all to the garbage. It's one word. Nobody goes above the institutional number, period. Profit taking. So all your indicators, your AI system, all of it went to the garbage. Irrelevant. So, folks, that's all what we have for you today. We wish you a really a pleasant weekend. And here's what it is. Now, the market fell many times to the long. Now there is only one direction below the support area. There is only one direction short. Now, if we look at this one here, there's a double support. There's a double support on the ES. Look where the ES at. Two direction, two different trades. That's why you cannot be cheap on your tools. If the Nasdaq holding on this double support, you have a winning trade on the ES. If the Nasdaq penetrate those double support, the ES is going down. And if the ES is going down, you're gonna have a losing trade. And here what it is, here, right below the wick. And now the market is not on your indicators, is either the ES maintain the double support and the Nasdaq maintain the double support to go long. And if it's not, and look at this, and if it's not, it's long, it's not short. So when you see little kid on some cheap app, and I always look at his support level, I try to close my ear because it gives me goosebump when he's talking, because he thinks himself is smart. And he has no clue what he's doing. But the first things I look at his support resistance, and then you come back the second day, he's still using the same support, same resistance. So here it is. The two markets not able to hold position. What is this indicating? Short. Don't look at any indicators anymore. It's short. Here it is. Short. You don't need an indicator anymore. Where is your target? It's not this. It's right there. Here's your target. It's finished. You don't need to look at indicators. If the market was not able to hold on those double support, that means it's short. If the market able to hold on those double support, that means it is long. Very simple. Very simple. Folks, that's all what we have for you today. We wish you the best, and we will see you, all our traders, on Monday. Bye for now.